Hey everyone, this is Panakwan again, and today I'm going to talk about a special stock which is Plug Power. Why? Because this is my X channel, and over here around December 11, 2025, I have said to buy. Why I have said it to buy? Because people are panicking, and the stock was around $4, and BlackRock had bought the top, and then it started as sold off. You can see that there was a major buying over here, and then people were selling, and these were like mostly retail traders or maybe investors. But at this point of time, I saw that okay, so now there has been again a significant buy. It might go up, and the probability of going down was very less. So I said just long over here and December 11. So right now it went up again to 2.37, and that's like 30 to 35% jump. And why it did, I'm going to explain here. So today the price action was 11.2% growth, and then their quarter four revenue, they have beaten it by 8 million, so they are at 225 million revenue. And then they were expecting a major loss, but still they beat it. They still have a loss, but still a very less. The gross margin kind of improved. Previously they were at more than minus 100%, now it's plus. Why they had minus? Because they had a very big project which was going on, and that's why like the gross margin was in negative. So this is a turnaround quarter for them. There is a lot of things which has happened. The CEO changed, but irrespectively, I'm going to talk more in terms about the basics. So the 2025 revenue, it's $710 million, and that's like 13% year-on-year increase. And then their gross margins are also increasing from it's, you can see like it was negative and now it's in positive. Their revenue from their electrolyzer, whatever they have been building, it's slowly ramping up, but they have been shipping their products. But I'm going to talk more about why it is needed, right? Because sometimes there is a wide disparity between the current price and what is the future. The sales funnel, it has at 8 billion plus dollars. At 8 billion is just a number. Energy, with so many things coming in, we have to save on carbon fuel, we have to work on nuclear. There is so many improvement that a humankind can do. So their cash positions, now we're talking about, okay, so because it is a cash burning company and an innovative company trying to build on a hydrogen solution, and it has been working around for like since 2000. So 26 years, guys, they have been trying to develop something. Still they have cash. Imagine so much cash they have already burned, but still they have cash, and they are saying to be profitable by 2028. Still that is a good enough cash for them to keep them cash heavy, so do not dilute the stake shareholders. But and these were like the impairment charges that they had over time. But impairment charges, it's too much over here, but you can say that these are like non-cash charges. Basically your company can write it down, so nothing shows up in their balance sheets. So why? The numbers tell the story. So this is what a trajectory looks like. So you can see that their growth was increasing, and then it kind of dipped. So that's why you see that previously the shares had dipped, and then it started increasing again. And there is a major increase this time, this quarter. And similarly, their gross margins, like their gross margins, company, any of the investors or shareholders do not like a negative gross margin. And you can see that we were negative, and then it is kind of increasing, and now it's at 2.4. Finally, it's a positive. So continuously they have been improving their EPS as well. So you can see that whatever loss they were having, but still they are contradicting their loss, and their cash burn is slowing down. They had burnt around more than 210 million, and then across the years it has been decreasing. It's always the same funda. Profit is equals to whatever they have earned minus expenses, and whatever development they are doing. So there is a lot of terms, right? So you, a cash burn rate, if it is reducing, margins are improving, that means they are going to make income, and they can turn profitable because they have so many things. What is the new CEO's plan? So the new CEO Jose is they kind of took a helmet like March 2nd, 2026. At his first earnings call, he kind of laid down that what he is going to do, because he came into the picture. People have a lot of belief because CEO is the one who gives the direction to the company. So that's what he's saying. Like EBITDA is gonna be positive. That's what he's saying at quarter four 2026, and then 2028 he's saying a path to profitability, which is a very good. Like imagine you are betting on something which is less than a coffee and is something which can turn around like $8 billion, right? Why it's the biggest bull no one is talking about is the AI energy crisis. We have been seeing such a massive scale of data centers just within the US, and there is the entire world where it can be brought in. You need proper demands, like proper energy grids, whether it's nuclear energy, whether it's, and setting up those grids are very expensive. But what is the cleanest way to do it? That is hydrogen. And that's, imagine if they come up with something which is revolutionary, like hydrogen has been talked about multiple times, but in case they are able to come in and they have clean energy, the major clients they have would be in Europe because of the wars which is going on, and they do not want to have LNG exports or gas exports through Russia. So if the electrolyzer that they are building, if they can pump up and keep Europe alive and turn the lights on, imagine that this company is gonna grow huge. So that's what it is, like AI energy crisis we are talking about, and everyone knows about this, right? This chart global data center and how much is being expected every year by 2030. That is what they expected. So ideally, every year when the chart comes out, it keeps on adding. So whatever you are seeing right here, if we go into the next year, which is 2027, everything will increase because we have been built out pretty rapidly. So mostly they will increase the forecast as well. Then not talking much about which are the market explosion, where can they sell, but talking more about the Iran war and Hormuz Strait, which is being closed. So because if we have seen that multiple times, any kind of oil disruption comes in, it impacts everyone. So what is the solution? Clean energy, and with that is also save the planet. Right now we have Trump administration, which because of that plug power also kind of went down because they reduced their expansion in much into the cleaner side, but still they have a lot of things going on. No one knows what's going to happen, but imagine that any administration comes and give them a green light that they can do more renewable energy and green energy causes, it's going to explode. And they already have technology already been deployed, so people know that it's working. But here is the major pick. So smart money has been loading up recently in quarter four. Vanguard has added up, and then BlackRock has added up again. Two Sigma has added up. Renaissance. Who is left? There is no one left. Everyone has been adding up. BlackRock added again. So that's what I'm saying. Like everyone is taking their positions. I know it's a big bet, but they are thinking about if you invest in $2, either you can get $10 out of it, either it will go to zero. So probability of getting it to $8 or $10 is much higher because they have been working on this for 26 years. 26 years is no joke. So that's what is the graph which is being showed over here, and then these are the upside targets. So 10 plus targets, which is a return 350%. And every time like this, if you search about WGS stock, you will see that whenever the gross margin improves and their cash burn rate reduces, the shareholders like it and they appreciate it. So mostly the share prices kind of go up. So next earnings would be very, very you have to be very careful and look for it. But the risk that you need to know is that they have 368 million of cash. So they might, so that's like 12 months. So they might dilute more shareholders. That's can happen, or they will have their own tactics. Other thing is that they have a class action lawsuit, which is DOE have given the loan to them. So that is also impact the shareholder. But most of the time, like companies kind of get away because they have so much. If imagine if they take a loan of $350 million from a regional bank, if they go down, the bank also go down. That's also there. So rather than it keeps on dragging, and they try to come up with some profitability plan. And similarly, there is a lot of risk again from IPO. Since 1999 they have been dragging down. So this is a roller coaster kind of ride. So either you ride the wave, and always there is a hype regarding the energy needs. I feel in case the CEO actually has a turnaround plan, this can go nuts. So thank you everyone, and please follow me on X. So this is my profile. Thank you so much again.